So a lot of people or a lot of traders, even if you're new, you know that indicators are mostly lagging. And all these EMA, SMA crossover strategies on YouTube, none of them work. You can even test them on FX Replay, or not even FX Replay. You can test them on TradingView charts they have, and you just code something real quick, very basic. You even GBT it, and you'll see over a long run, none of those strategies work. It's because they are lagging. Indicators are basically all lagging. What this means is they are based upon calculations of past historical data. And what if I told you today that price action is also lagging? Looking at candles to candle, price action is also lagging. Me indicating or marking out this POI is also considered lagging. Now, if indicators that are lagging don't work and price action is also considered lagging, then what truly does work? If you watch till the end of this video, I'll discuss what truly does work in the market and how you guys can apply that and become actually profitable the right way. So first off, we'll go over some very basic indicators a lot of people know about. EMA is exponential moving average. SMA is simple moving average. And the number that comes after it is this representing number of bars that's calculated based off of. So if it's EMA 3, it means it's taking an average price of the last 3 candles. So if you're on the 1 minute, that's 3 minutes of price action. If I'm on the 1 hour, that's 3 hours of price action. And this smoothens out based on a mathematical formula, which is exponential. What it means is essentially it adds a lot more weight and value. I think it's about 50% more weight and value to the more recent candles than the last candle, right? Or the last candle in terms of that array of candles. So you have an array of 5 candles. It will give the most weight to the first position in that array in a sense, because TradingView for arrays, it counts arrays backwards. So if you don't know typical arrays in programming, it goes like this. It goes in sequential order like that. But in TradingView, how it counts is it counts backwards like this. So like if you want to get the previous candle, it's 1. If you want to get the second previous candle, it's 2. And like from a logical perspective, that does make a lot more sense, because you're typically, when you're making an indicator or program, you're typically counting from the current candle, you know? But anyway, nonetheless, that's basically what EMA, SMA are if you did not know. SMA, it just takes the average of the 3 equally. It doesn't matter if it's the candle 1, candle 2, or candle 3 in the index of the array. But the point of this video is, like I said, if price action and indicators are both lagging, what is the true solution? Because you guys know lagging indicators, if you're trading them mechanically, it will never work. It will never work. You will be stuck in an endless loop of never making money. In fact, you would probably be losing money after commissions and spread. So if marking out zones is lagging because it's literally based on historical data, you're marking this POI zone off historical data that occurred already. And if you're waiting for reactions at these zones, you're also trading off historical data. Because let's say this reaction here occurs. Well, let's say you enter at this candle here. You're trading off data of the past. Let's say price hits your POI here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You're trading off the reaction of the past 11 candles of data. So this is historical data that's already occurred, right? And now I'll give you guys some very quick, interesting data you guys might not know of. But I teach a few entry models within the course, and one of them is the impulse model. For the impulse model, if we wait for a reaction in the market with the impulse model, it will improve your win rate by about 5 to 10%. Okay. Now, if you wait for a OB or IFVG entry model, it will improve your win rate by about 10 to 20%, depending on how well you can utilize them. 10 to 20%. So keeping that in mind, what that tells us is that if we do wait for confirmation, like reactions at zones or areas of interest, we will have a guaranteed higher win rate. But by how much is the real question. Because a lot of mechanical EA trading robots, for example, that people sell, by the way, trying to help y'all stay away from the scammers. If you've seen when selling a trading robot that states 100% passive income, even if they're charging like 20K for it, I've seen it on WAP, it's 99.99% is scam. Because if something truly worked that's 100% passive, why would someone sell it, you know? This does not make any logical sense, and people that buy are obviously logically dumb. No offense, but it's just selling you a dream. Now, trading it manually is completely different because you still have to put in the work after you learn something, right? It's not something that just gives you money and prints money out of thin air for free. Now, again, since you guys realize what I'm trying to say is the reactions still improve the win rate, but how is this lagging then? Well, for one, the one benefit of price action is that it can give you instantaneous reactions or data. So on an indicator, it will smooth out the average of the past, let's say 2 candles or 3 candles, whatever you set the number at for EMAs. If you're turning out price action, you see the exact second. If you go even on seconds, you see the exact second of data. So as soon as that data comes out, you immediately can recognize that data and put into a feedback loop, essentially, to trade off of, right? So that's the benefit, I'd say, that indicators or price action has over indicators. Hence why I don't trade off purely indicators. Now, I do make indicators, of course, I use every single day, but these indicators are working in combination with my system that I'm manually trading. They're not automated indicators where they're trading robots that just take mechanical trades. It's not easy to program something 100% mechanical. It's really not. Something that may look easy to your eyes actually took a ton of probably 100 plus lines of code to program into reality. Like for example, my ETU-PY indicator, this is about 300 to 400 lines of code. It may not look as complex because all you see with your eyes is just drawing visible PYs and zones, right? It looks very simple. But no, you don't understand that it takes so much code to even make something simple occur. Nowadays, obviously with efficiency and how programming languages have evolved to higher level instead of lower level languages, it's typically a lot easier, but still, nonetheless, still requires effort and time. So hopefully that does make sense to y'all. So I'd say price action does have a slight edge over indicators. But if you are trading a 100% mechanical system manually, what I must say is majority of them either do not work or they have a slight edge. And again, a slight edge, yes, a slight edge is indeed all you need to obviously become profitable in the markets, right? You don't need something crazy. You don't need a crazy edge. But typically, if you have a small account, you do want somewhat of a good edge so you can at least compound the account in an efficient manner, right? You don't want like a 55% win rate at 1-to-1 after spreading commission, just basically break even. But majority of 100% mechanical traders that are taking every single zone, taking every single reaction off every single zone, for example, you're gonna come out roughly either break even red or depending on how good a system you trade, you might come out maybe even with a solid edge, right? Which is great. That's great news. But for those that truly want something that's extremely good in terms of performance, pure raw expected value performance, trading for me is 80% mechanical with 20% discretion. What this means is, and this is exactly what I teach in the course to members, you need to add context and narrative and anticipate PYs not holding. What that means is we can potentially anticipate with discretion, let's say for example, I can anticipate this PY not holding. So even if we get confirmation over my entry model here at this PY, I'm not taking this trade no matter what. No matter how much I see price move in my direction for reversal, I'm still not taking a trade because I'm expecting this to be a manipulation, or in other words, an internal liquidity sweep to push against this and take out this PY. And when you add discretion like this, it will be something that can significantly boost your win rate. You can go from something that's a 50% win rate at 3R to something that's a 60%, 65%, 70% win rate at 3 to 4R. That's like an example. Now, a 10% win rate jump is very significant for those that don't know. It can almost boost your expectancy 2 times, right? Depending on your RR. So that's definitely something you do want to 100% keep in mind, that you want to be careful and understand that even a 10% win rate is significant across a large sample size of data. Is very impactful. But what that does is essentially that improves my win rate. A lot of discretion is mostly improving your win rate. You can have also discretion for your risk reward improvement, right? For example, let's say my discretion is anticipating a weak higher low. Now, for example, a weak higher low is something I'd say you can't really say it's 100% discretion. You can actually technically make this basically mechanical, just reading structure. right? But I think discretion is something like determining which PY to trade off of is better, right? For example, instead of picking, let's see if I find an example here. Instead of taking a long here to this high here, maybe taking a trade here off discretion off here is better than taking a trade here to that high, right? Something like that. I'm just giving a random example. So that 20% discretion is coming from what? Pure screen time and market experience. And again, why do I still say 80% mechanical? Well, because I think a lot of things like mainly your entry model should be almost 100% mechanical, or should be 100% mechanical. The discretionary part of the entry model is now what? Which entry model do I use? Because I teach several different entry models for different scenarios and situations. Some of them can be mechanically defined, but they're obviously rated differently. For example, what I rate as an A+ setup might be slightly different than what someone else thinks is an A+ setup to them, because of confluences, things like that. That is part of the 20% discretion. But if you want to even categorize your discretion into mechanisms, you technically could, right? If you want to stack confluences, let's say you have specific mechanical confluences. If you want to say 3 confluences or more, you can mechanically count this as A+, 2 or more, count this as A-, 1 only, you can count this as B+. That's a way to basically make it 100% mechanical, converting your discretion into 100% mechanical, if you really want to call it that. But I particularly like to follow this rule. You want to keep everything that you can keep mechanical as possible. But what I teach again is anticipating PYs and drawing liquidity is at 20% discretion, especially drawing liquidity. Drawing liquidity is typically on the higher time frame, and that enables me and many others to basically take good trades and many avoid and filter out bad trades just off understanding price and structure, right? How I'm able to avoid trades like this. This was a short, even though my entry vol presented itself, even though it mitigated a POI, right? It met 2 criteria. I still did not take this short, no matter how far. Even if this went down here, I'm not taking that short, based on discretion and market experience, knowing that we still have better POIs resting above, and this is more often likely the internal manipulation like that we want to take out first before we get like a real solid short here to take out inducement here, creating this SMT later on. And another example was literally here. If I go to ES, this was an example of discretion here. So for me, I held onto this trade here. Even though we had an SMT, NQ took out the high, ES did not. I still held this trade here, even though we had a perfect entry model here to go trade reversal. I still held it to the weak high, and this is just market experience in knowing when to do what. And that is what I mean by intuition or discretion. So now, the reason why I still say 80% also is because you still need something that's objectively testable. It should already basically work. So if you're testing like a system, it should, for the most part, either be break even or at least a slight edge. Because if you at least have a slight edge, you can significantly boost that edge with filtering, optimization, or some discretion, right? For example, let's say, because if you're going to take every single, here's an example with my system. If you're going to take every single POI, like let's say you lose here, so you win here. Let's say, try to find a better example here. If you take every single POI, you would have lost this short here. You would have lost this short here, taking out this high. You would have lost this long here, right? You would have made money here. You would have lost maybe this short, this long here, this long here. Like if you're just spamming entries, you're gonna have a lot harder chance at becoming profitable in trading, just because you're not understanding context. So again, context is key. You got to read the market as if it's like a book, and you're flipping through the pages of the book and building everything together, right? So hopefully this video helps real quick. Help you guys understand that despite price action still being somewhat lagging, except for the instantaneous part, you can still make it work with price action. You just need to be able to build more screen time and experience, seeing how the market truly reacts, or not even reacts, truly drawing liquidity is what's most important to me, right? Drawing liquidity is very discretional in my personal opinion. It's not something that everyone can get a hold of, but I believe it will improve your system no matter what you trade. So hopefully this video helps.